Good morning, Internet. Welcome to the Bubbles Stock Market Open Show for Wednesday, October 29th, 2025, 8:07 a.m. Eastern Standard Time. We have the normal way to start the day. Do your bookkeeping, get out your get out whatever you're doing bookkeeping on. This one's free right here, really easy. Create a Gmail account if you don't have one. Get your accounts going. What accounts do you have? You got an easy format to follow. The date. Put the date in. Log into your accounts. Put whatever whatever. Just start keeping track. Start keeping track. Do some bookkeeping. So we had an example here of like, let's say this is your whatever you have in your brokerage account. Let's say this is your main checking account. You log in. There's still $1,000, and then you got another account. You're doing that one, and then this, let's say, is your checking account, and excuse me, your credit card, and you bought $300 worth of things. That's why this 300 is in parentheses, but it hasn't posted yet. So we're still at the zero. You're checking that account. You see it hasn't posted yet, but you're waiting for it to post. And you know that this is the account that 300 is going to come out of to pay it. So that's why, in parentheses, we got 1,000 minus 300, 700. We got that left. All right, so we got our bookkeeping done. Stay on top of that. Without accurate bookkeeping, you will have a difficult time winning the game. It's not that you can't win, but it's going to be more difficult than it needs to be, and you're already playing a difficult game. So get that. Make sure you're doing that for yourself. Let's take a look at the MMRI. Went up 1 point yesterday. It was at two. Where's the 28th? Come on, give me the 28th. I think it was at 244 yesterday. Maybe the 27th. Okay, 28, 244. Went up 1 point. Not anything too drastic. We'll have to watch it, but overall, we see it kind of goes up and down. But it's been going down since January. We'll see if that is going to continue. It looks like the 10-year yield on the went up just a little bit. Dixie's been right under 100. And something to make note of. Mike Norman, you can check out his channel. If you watch it consistently and you're paying attention to it, it's possibly going to give you some useful information, especially when you use it in conjunction with some of the stuff. He has paid stuff that you can do too, but maybe check out the free stuff first, and then if you're following the free stuff, you're checking on the accuracy of what he's saying, then consider going for the paid stuff. But he was mentioning some of the things that he follows that start being careful of a pullback, which it's not an unreasonable assumption given the things that we have going on. Like this Buffett indicator is giving us an idea that from the kind of Benjamin Graham, Warren Buffett value investing perspective, a one quick indicator to look at is telling us that the stock market is definitely overvalued. Unemployment via the via these Yonker guys over here, Yonkers, ladies, guys, girls. What do I mean by Yonkers? It's just I'm just making up some BS name to put on these Yahoos. And I know you could probably say, well, the government shut down and all this stuff. This government shutdown happened well after August 25th, so it hasn't been updated for a long time. But what does get updated is constantly we're having news articles that are like this. Let's see. On think Amazon. I think I saw Microsoft. Here's a look at this. Still August 2025. Of course, of course. You got to you. In my opinion, I don't know what you have to do, but what I have to do is I have to be extra smart, extra wise, because I personally can't. I don't feel like it's safe for me personally to rely on these government statistics that don't get updated. And not only that, I think it's possible that whoever is, reflected on these statistics could, do some cook the books. You might know how to cook spaghetti in the kitchen. Well, maybe people that do numbers know how to cook the books. It's not unreasonable because it has happened in the world before. There has been accounting fraud. And to assume that it never will happen again or might not happen now, for my 48 years of being alive, we're in the most like divisive, polarized time I've ever seen in the US. So why wouldn't they cook the books? There's all types of other craziness going on. We got furloughed over here, federal workers, a lot of federal worker stuff, unemployment rates. I wish I would have if I actually I don't wish that I would have taken these pictures, but I could if I want. I get some Yahoo Finance articles, at least the headlines, sent to my phone, and I can click the phone on the notification, click the notification, and read the whole article if I want. And normally I don't because I can kind of gain an idea of what the article is just by the headline. And I know you can't necessarily judge a book by the cover or article by the headline, but there's so many articles. Look at all these articles out there. We're in a bubble of news articles. There's more news articles coming out all the time, and maybe you have time to read those. I figure I could make the time, but I just don't have any joy of reading these articles. I don't know who these articles are written by. I would have to really research who the person is and try to figure out if I value their opinion or not, because a lot of the stuff is really just opinionated, and in my opinion. So I continue to see a lot of headlines coming across. These are usually more stock ones. I only put in a symbol here, but I continue to see headlines coming in about different ways people are getting laid off. Well, this is we're looking at just federal. Is that it? Oh yeah. I really am not a fan of Yahoo search engine. think it's I think it's worth my time to start putting in putting in an effort to figure out how to change that. Or 2 days ago, leading companies announcing layoffs. I don't think that has much to do. Amazon laying off people is probably not directly. It's not a direct impact of the government shutdown. The government doesn't run Amazon directly. Indirectly, who knows what happens behind the scenes? Yeah, look at this comprehensive list of 2025 tech layoffs. This is like the whole year I've been seeing stuff like this. Oh, we're going down to the Philippines, huh? All right, so with that being said, F these guys. And the Schiller PE ratio is basically giving us this a different measurement, but the same result of the stock market is expensive. So if the stock market's expensive and we have fundamentally a lot of people losing jobs, who knows if they're getting other jobs, who knows what their financial situation is, I don't know, but it wouldn't be unreasonable to think that if the US job economy is not that good, that sooner or later that might reflect in the stock market. However, as I learned back in 2012 from Phil Grande, the stock market and the economy are actually detached. You can have the stock market continuing to go up, as you see here, while the economy just goes down in the pooper. And so we don't want to get these things conflated. That just because the economy is bad doesn't necessarily mean the stock market's going to go down. In fact, maybe the worse the stock market gets, maybe they're cooking the books a little more, and cooking the books in this way of making sure the stock market stays up. Most of you have probably already known about this. There we go. It's such a thing that all you have to put in is this much, and boom, it's coming up here. Plunge protection team. How far can the stock market go down? It can go down as far as the working group on financial markets let it. That's how far it can go down. This was put in place in 1988 under Ronald Reagan. You can check it out if you want, but that's how far it can go down, as far down as they want to let it. So I think there is some, oh, you can go with the myths and facts. You can do that. There's a lot. Look at all these different, all this different stuff. And I'm sure some people that put myths and facts are, who knows? Who knows? It's the one thing that we do know, that we can know for a fact, is right now the futures of the S&P 500 is right here. The futures of gold futures are right here. This is one thing that we can know for a fact. That's the number. Now, how it's getting to be to that number, maybe we won't know that for a fact, but at least we have some concrete, objective information to go on, not just opinions and articles by people that we've never met before, that we have no idea who they get their paycheck from and what their agenda is. And it's silly just to assume that everybody is just an honest person and has your best interest in mind. If you want to believe, you want to live a life believing that, go for it. I'm going to be a little more skeptical of the good intentions of the world as a whole until I see some sort of result of these good intentions. And at the moment, that's not what I'm seeing. At the moment, I'm seeing a bunch of results of weird intentions spread out over decades. Nonetheless, gold and silver, it's not a surprise to see them going up after we see these long wicks to the bottom, but it doesn't mean it's going to keep going up. Oftentimes, especially we see it kind of getting stuck in here. Oftentimes, these long wicks to the bottom are giving us a clue that possibly the the downside is either slowing down or in the process slowing momentum and possibly coming to an end. So not a shocker there. Dollar getting some resistance right in here at the 99. We have we have some things coming up here today at 2:30 p.m. We will have Fed chair press conference, and we'll see whatever happens during this meeting. Is it going to affect the markets? Or we know it's going to affect the markets to some degree, but how is it going to affect? And feel free to look through that. So I'm going to be somewhat waiting to see what's going on there. We got, I think, a lot of tech earnings starting to come up. I know ServiceNow reports after hours today. Let's see, what are some Windows AAPL? Apple reports tomorrow. Microsoft reports today. It's amazing that I have a hard time remembering Amazon, the ticker symbol for Amazon. What an amazing, amazing thing. It's probably not amazing to you. And AMZN, there we go. Let's get back over here. AMZN. Amazon reporting tomorrow. So we'll go through all these, a lot of these different tech stocks to see what happens during the earnings, how that's going to affect the market in general. And I was able to remember something that I couldn't remember yesterday. So put the call ratios here. There we go. I forgot to add that dollar sign. Overall, this one was closer to 66. So is our if we're reaching all-time highs, while we continue to reach all-time highs at the moment, are investors getting complacent? I think this was around 66. And one thing that I learned from the Armor course by the Cashflow Academy, which I recommend you take, is if this starts getting low, like right around I think right around a 1 is where it kind of is. And as it starts getting lower than 1, it starts giving us the indication that people might be becoming a bit complacent. And as the person Warren Buffett has said before, when be fearful when people are greedy, and if no one is scared, and if we look at the stock market based on two primal emotions, fear and greed, if the stock market in whole is not buying insurance, they're showing a disregard for any movement to the downside, it might be an indication of excessive greed in the market. We do see the market's overpriced. There's fundamental things that are not going well. But people can smoke 2 packs of cigarettes a day and live for a long time. And just because there's fundamental issues wrong doesn't necessarily mean that everything has to come down. However, there's people that smoke 2 packs of cigarettes a day and have really, really bad health and die. I think that's a little more the norm. So let's see what's going to happen in the market. It's a different type of entity than a human body, and also the topics that Mike Norman's talking about, which I guess is basically money coming into the economy via, however, I'm not exactly sure where he's watching. I think he's watching the Treasury markets. Which the longer I watch him, I'm thinking about subscribing to his service just so I can try to figure out what he's watching, what he's looking at, and maybe someday I don't have to pay per month. I can look at it myself. But at the moment, that's not the way it is. So um, as I mentioned, I like to watch people for free. Whatever they're putting out for free, I like to keep looking at that and see what they're saying and see how does it play out in the markets, and if it uh if it works, like the MMRI, which I watched for a while before really starting to see like, wow, this thing really works pretty accurately. Now, is it the only thing I'm looking at? Nope, obviously not, but it is another facet of this abstract diamond to try to get a view of it. And I personally want to continue down a path of what if fundamentals that create the market or the system of the market or anything about the market, what if something changes that doesn't get wide attention? Now, I'm not talking about some big conspiratorial thing and they're changing stuff. I'm talking about it could be little changes. Like, for example, most people probably already know that there's less actual physical humans as market makers now. That there's the pits of the floors is there's not as many people on the stock market exchange anymore because computers have taken over a lot of things. So that's a fundamental change. It's not like we need someone to come out and tell us if something like that happens. It's just like they're trying to. Well, we would imagine that the idea is that they're trying to be more efficient and more effective in the market. So what sort of changes does that does that take place? Now, let's just be really clear here. I'm not saying that because of that there's some change that the overall dynamics. I'm saying that is an example of a change that can happen that could change different things of the stock market. And when things like that happen, maybe some of the indicators of the past either become less reliable, or maybe they're still reliable, but maybe what they are indicating has changed. I'm playing with this concept. I would imagine, just like as a human being starts, you have the normal personality of a human, but as a human, if a human starts consuming something like some sort of drug or some sort of alcohol or something like that, the behavior can change. And if you are not accounting for this change, what you're looking at of let's say either temperature of the person, behavior of the person, all these type of things. If you're not counting, if there's a change and you are not factoring in that this person is consuming something that's causing them to act differently, if you're not factoring that in, it's going to be kind of confusing. So something along those lines. I don't know where the answer is. What I do know is if I keep my mind open in not saying that I know something has changed, but just being open to maybe there are changes and how are those changes impacting. That's it. Remain kind of open. And some people can't remain very open. We like to give a lot of credit and lip service to open mindedness, but a lot of times for many people, that's what it is. It's like, oh, yeah, 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 I'm open minded until it comes to something that really matters. Like watch people with food, watch people with different type of different type of health therapy type of routines and behaviors and things like that. Watch people with names, different names. So you start hearing people say, "Well, that's weird. Oh, I'm not going to eat that. I want to do that." Then they probably give a lot of lip service to open mindedness, but when it really boils down to it, they're not. So instead of just giving lip service to being open minded, I'm really, really trying to be open minded and trying to see things, trying to be aware of how things could be changing and to be on the right side of those changes. But overall, I wouldn't be surprised if before, well, one thing I wouldn't be surprised if it was we open up. Looks at the moment, it looks like we're going to open up with a little bit of movement to the upside. Service now is going down. Let's see what most of these stocks are doing. Oh, uh, getting some mixed signals here on a lot of stuff. Gold starting after hours, really starting to move up, which wouldn't be surprised since the futures are doing that. There might be a little bit of light trading, not much movement as people are waiting for the 2:30 meeting today. And then we'll see what happens. I wouldn't be surprised if I want to be surprised for anything. I want to be surprised if the chairman says something that people like and it goes up to the upside, but I also want to be surprised if it goes down to the downside. That's the thing about events. Like there's certain events, you can do event based type of trades. Earnings plays would be an example of those. Long strangle, sorry, long straddles. I guess you could do a long strangle too, but long straddles are. That was one of the first earning plays I ever heard about. I never really dialed it in of getting good. I will probably work on that now that I'm sitting in front of the computer from before market open. The market's not open. I'm already sitting in front of my computer looking at things until market close and sometimes afterwards. So I'll probably dial that in. But also like when we know there's going to be things happening, particular things like different events. Hey, hey, hey. Oh, oh, here is that. Oh, that's the problem. We got to get this out of here. Yeah, come on, get out of there. Oh, get out of there. Are you out of there? Okay, there we go. Perfect. You're out of there. All right. So what is today? Today is Wednesday. All right. This type of event, it's probably people kind of sitting on the sidelines waiting to see what might be going on. Already looked at that. Let's see what else we can. What else would be helpful to take a look at right now? Well, we're coming on 25 minutes, so what might I be able to leave you with? We got a news headline coming on over my phone right now. OpenAI closer to magnificent. Out from Microsoft's shadow, OpenAI is free to make more AI mega deals. All right, so what is that going to do? You know, I noticed that on not just on YouTube, but when I first started learning about stock market stuff, YouTube wasn't as developed as it is now. But whether it was YouTube, whether it was somewhere else, the stock market tends to bring out a lot of people that speak with 100% confidence. And I think people are attracted to that. The reason why, I don't really know. I mean, if anything, in the last couple of years, I thought we should have learned the lesson that just because someone speaks with a bunch of confidence doesn't mean that it's actually true. Look at how Conor McGregor talked about he was going to do XYZ to all these different people, and he didn't. But he had so much confidence. He believed in himself, and it didn't happen. So I don't know. But what I do know, I have confidence in myself, and the confidence I have in myself is something along these lines. And that line is I'm doing fairly well at short strangles on certain stocks, maybe a little more than fairly well. I'm doing that pretty well. No matter what happens with I like to sell the strangles on a week to week and try to avoid these type of I'm definitely avoiding earnings. So I'm waiting for service now. I might have to pass on that one, which is my kind of go to, and try to be aware. I'm trying to be aware of things like this and how they might move the market. But generally, I like to sell far enough away from the money that if there is a drop, I'm still relatively good, and I like to keep my buying power drop or large quick shot up to the other side if I'm doing a strangle. So it's even if I get my if my short call or my short put gets into a little bit compromised, I usually have enough buying power to uh, withstand that, and I usually sell far enough away from the money that and at usually support and resistance zones and using these different indicators from Thinkorswim to keep myself out of trouble. So that's what I know. That's what I'm confident in. I'm confident in certain companies like Coca-Cola. I have a degree of confidence that there's going to be certain companies, Coca-Cola, MO, that they're not going out of business easily. They're going to be around. They've been around. They're probably going to keep going around, keep being around. So I will take actions accordingly. Now this I don't have as much confidence that this is going to be around, but I'm still building a position in it. Not that you should, but I am because I'm willing to take the risk on it, and I'm confident in my ability to come back in case my position in BTCI goes to zero. Things of that nature. But what I'm not going to pretend to be confident in is to say exactly like what is going to happen with something. I'm confident in this. This a stock can move one of three ways: up, down, or sideways. You have buying power involved. You have time involved. You have support and resistance involved. You've got other things involved, and I'm confident that myself, I can keep learning skills to have me trading and investing in the markets and have me overall in the long run be financially better off regardless of different directions that the stock might go and all this stuff. So while all these other people are or a lot of other people are talking with supreme confidence that I don't know this person. I don't know what their agenda is. I don't know who pays them, how they get paid. I don't know where their allegiances lie. I don't know. So they can say all this stuff and be all confident, but if I unless I like somehow get to know what their personality is over time, it's just it's just something to watch for. And what's the point of that in the bubble stock market show? I think the point of it that I want to um, convey to you is at least consider for yourself to look at this starting to move up. At least consider for yourself to build your own confidence on being dynamic in the market and being able to make decisions, make profitable decisions for yourself, regardless if a stock goes up, down, or sideways. So that way, it's like, yeah, you can hear some blow hard or blow soft on TV, on YouTube, in your dining room, at, at any place that you go. Oh, coming down. You see that? Oh, look at that. In action there. There's buying and selling going on there pre-market. Back to this. To develop your own develop confidence in your skills of taking this information. And I'm not talking about information I'm giving you in this video right now. I'm talking about information that you gather online and from your brokerage account to make doing your best to make profitable decisions. So you feel confident that over time you're growing in your skill, you're increasing in your understanding of how to use the different tools out there, how to use the different strategies, and that you're able to put yourself in a better financial situation month after month, or at least year after year. That's it. That's what I'm hoping for you, because I've know what it feels like to not to want to do something, but not really know how, and looking to other people for help with that. And a lot of times, what happens, unless we develop this inner confidence and skills in and of ourselves, we become like victim, or yeah, we're kind of held hostage the um to the integrity of other people. So don't have your finances held hostage by the integrity of other people, relying on these other people to make your decisions. Figure out how to make those decisions for yourself. If I can do I know this is pretty cliche. If I can do it, you can do it. But it is true. It is true. There I can say this. There's probably people that are dumber than me, or at least dumber than where I started from. But I was dumb. I was dumb. When I first started this stuff, I was dumb. And I've only become smarter, which I would say I'm still dumb. I'm still making mistakes. I'm still like doing things like, why am I doing this? Why did I do that? What did you do that for? But I'm not as dumb as I used to be. So if someone like me, who really started playing this game from an intellectual handicap, if I can get smarter over time, and I can go from a place of being a basic moron to being giving it a shot of trading for a living. I'm at whatever, how many months now? Like at what point? I don't know at what point it needs to be. How many months I need to go into this before I can say like, yeah, I'm trading for a living. But at some point, like at least I've gotten smart enough to realize like this is not something I can take for granted. I really have to play my cards right. So slowing things down. But if I can put myself in this position over time, and I wish that I had a video showing you where I started, but I don't. I can tell you this though, the first options course I went to, which was like the first stock market course I went to, just happened to be on options. I had no clue what was going on. I listened to that, and not only there were some other things that I had, bad habits that I had that were working against me. That if you could see those things, you'd probably be, wow, you overcame all that to get to this. And what I'm at isn't really impressive. It isn't anything impressive unless the only thing that's impressive is where I was to where I'm at. That's the impressive thing. That my journey is looking like this. My journey is starting in the lower left hand corner, and it's going towards the upper right hand corner. That's the only thing that's impressive. The numbers aren't impressive. The speed of which I'm doing it in is not impressive. But luckily for me, I'm not trying to be impressive. What I am trying to do is be able to pay my bills and live a standard of living that I want without having a job, with doing it just from a computer and internet connection. And technically, I'm meeting that. How many months in a row do I need to do it before I feel secure and saying like, hey, this is what's going on? Not sure, but I started doing this in August. Now I'm in going into November. So let's say one year without hiccup, I'll be pretty happy. But okay, so now we're getting way long here. Just keep learning. Learn from everywhere you can for free, and then before you pay for any type of training, make sure that you're getting free training from that company. They're putting out something for free, so that way you have an idea of their personality, their sort of training style, their trading style, investing style, whatever. Make sure you like that. Just keep learning. And you can do it just like me. Just like me. I can do it too. You can do it. It takes a lot of effort, so let's put that effort in. Aloha.